And that's what's always good to use as confirmations. You want to be making sure that it's making lower highs and lower lows if you're on the short side. And if you're long, you want to make sure it's making higher highs and higher lows.
All right, everybody, welcome back to This Week in Steady Trade. We're doing another normal episode, but before we get to it, I want to remind you guys that we're doing a giveaway courtesy of StocksToTrade. 5 people who, check out the description below, leave us a review on iTunes, the Twist podcast. If you leave us a review, just give us your honest feedback. You'll be entered into a giveaway where you could win 1 month free of StocksToTrade. All the details are in the description below, so make sure you check that out. And let's get to it. I know the boys here are having a banger of a month, so I'll let them, how's it going? How's your week? What's going on?
It's going really well. I think I mentioned last episode that I was making almost all my profits on OTCs and very little on NASDAQ. Yesterday was a great day. I actually made quite a decent amount of money on iBio and HTBX. So that really brought my profits back to, I wouldn't say not even close to even, still made far more money on OTCs this month, but it's good to see we have some NASDAQ runners coming back, nice multi-day runs, and that the patterns are still there. So I'm making some money there. So really happy about that.
Sweet. Mr. Jack?
Yeah, this month has been really good. I've made a few trading errors, but really I have had a very consistent month, and I've had one red day of just $600. So I'm keeping my losses really small, and I'm up over 6 figures again on the month after today, which is really cool, to be able to do back-to-back 6-figure months. And there just wasn't too many, perfect setups that I've seen so far, but there's been still a lot of A setups, and I've been sizing up a little bit and capitalizing on them while still keeping my risk tight. HTBX, like Kyle said, that was a great multi-day runner there, long and short, great plays on it.
Sweet. Yeah, for me, having a pretty consistent month. I think in terms of like my own personal records, right now it's my 3rd best month behind May and June. Monday, just full disclosure, I did have my biggest red day in a long time, probably 3 or 4 months, but turned it around, refocused, and made like 8K on Tuesday and a little over 3K today. So I'm green on the week, doing really well this month, and just looking. Was the 22nd, so we got basically a week of trading left, looking to end it strong and see what happens. So sweet, man. Yeah.
Right on.
Kyle, fire up those charts.
Let's do it. Let's see here.
Fire 'em up, big Kyle.
Oh yeah.
So my personal favorite play of the week has been iBio. As you can see here, typically what we always, or at least me personally, what I like to look for is multiple green days and extension. You see the nice breakout over about 340. And it actually was a little bit choppy on these 3 days trying to get over that level. But once we got over that level, we gapped up on, I believe, some news. It then ran from 5 to about just over 7. And so I wasn't necessarily looking for the first red day right away. I was fully prepared for it to potentially go to 8. But I also was prepared for it to go down just in case it did want to, potentially have its first red day. So as we go into the intraday chart here, looking at it pre-market, if you look at here, right out the open, we can clearly see, or before the open, sorry, pre-market, there's clearly some topping out at 775. And that doesn't mean a whole lot because it is pre-market volume. It's not as meaningful, but you also see the previous top at 720. So if we, it's kind of like in a channel now, right? You see if it keeps holding and supporting at 720, it keeps topping out at 775, whichever way it's going to break is likely the direction it wants to go for the rest of the day. And so as we open, we, don't want to spike. We panic right out of the open and we quickly break 720, break 7, and then bounce. Now you see this bounce here. We actually bounce and hold under 720. I think our high bounce is like 719, 718. So at that point, that's when I really had confirmation that this was probably going to go red. I took most of my size right into this bounce, I believe like 717 or so. It panicked. That let me know I was right. I held comfortably through this bounce. And then as you see, it slowly fades and fades and fades. I believe it goes red. The previous close was, what was it here? It was what, like 650? 630, 6, yeah. So held that bounce. We then go red down here, held this bounce again. And I noticed a lot of people potentially showed their chart, or they showed their chart on Twitter. And I saw a few people cover into like this red green move, like it went back green for a little bit. And I used to make the same mistake, but I stopped doing that simply because you just have to treat stocks like a bouncing ball. So when we panicked kind of really with only one significant bounce from, 750 down to 6, a bounce back is only natural. And so using red green as a new risk, even though it's still so sold off, isn't really a good idea. And I believe VWAP was around like 680 or 690. So it never even got above VWAP. So I was totally fine in going back green, held most of my short. And then finally, once we went below 6, that was my main goal. I believe I covered, most in the 580s or so. And then, locked in about $4,000 in profits. And that's definitely my best NASDAQ trade of the week or of the month. So super, super happy with how I played it. Tried reshorting the bounce midday, but, as we started like triple bottoming here in the 570s here, I got impatient. I didn't think it was going to go much lower, and I ended up being right. It actually bounced. So I'm glad I covered. Today, though, we actually did gap down quite a lot and panic lower, but I didn't really touch it today. It just, I didn't want to swing, and I, gap down too large for me to really short. So that's about it for this play.
Solid.
There we go. Next play was HTBX. Go for it, Jack.
This was my personal favorite play of the week and probably a month so far for the NASDAQ. Very clean breakout there where you can see it tested the highs on that increased volume candle, had one small pullback, and then went on a very clean 4-day green run. I wouldn't necessarily call it A+++, just because it did close off of its highs 2 days in a row there. So that third day or that fourth day there, that was really nice. But if we saw, 4 or 5 of those candles, it would have been a lot better in my opinion. Maybe potential for like one of the halting ones when it goes red. But this one was just a slow fader after the high was put in. Kyle, could you pull up the
right here? Let's get right here.
Yeah. So this one was a little tricky. The huge crash day was the second day I traded it. I actually did start shorting it the day before when I thought that potentially it was going to roll over just because of how weak it closed off its highs. And I just didn't know if it had the squeeze potential, and it had a really weak morning there. I ended up going after that lower high in the 3 to 310 range after the morning high was set. And I did luckily cover some just because I saw a bunch of buyers in the 280s. But then, eventually came back and I took my position off when it started making a lower low. And that's what's always good to use as confirmations. You want to be making sure that it's making lower highs and lower lows if you're on the short side. And if you're long, you want to make sure it's making higher highs and higher lows on the short side. And that's kind of how you can increase your risk reward potential, because you can get a tighter risk and you can keep adding once it's creating new levels. Something just to think about there, as this one illustrated it pretty well. The next day, Kyle. So this day was really, really tricky. Unfortunately, I wound up shorting it pre-market into that weakness there, just because it had topped out at 4 the previous day, and it had a bunch of attempts to kind of gap up, and then it started showing some weakness. Yep, there's the 4 there. And unfortunately, I got stuck into that wash there, and it was a very manipulative ramp up green candle squeeze, as you can obviously see. So it's just really annoying that they have to squeeze it out before it's ultimately just going to dump at the open anyway. So I ended up taking a decent little loss there, about 1,500 or so in the morning on that pre-market move, which just didn't set my day off. That's not like how I like to start my days. I like to start my days with a good trade. But fortunately, I had another trade at the open to focus on, so I completely ignored it until we had a failed morning spike. And then once it made the that morning low where those wicks are. Yep, Kyle's mouse is on it now. I then was like, okay, now I'm going to go after a bounce if it starts rejecting off VWAP. And VWAP is not on the chart, but that was right around where VWAP was. And as it started making that lower high, I started scaling into that. And then as it keeps showing its weakness, I was able to add to my position just a little bit more conviction size, because now we're going red for the first time in market hours. So that's a lot more meaningful than pre-market. I had about 3 times the amount of size that I had pre-market, because the liquidity is so much better at the open, even though I got, that's a really bad pre-market loss for me. $1,500, I usually don't take that big of a loss pre-market, just because the liquidity is not as good. So I never like to have too much size. And then, as you can see, it panicked, and I covered some and then re-added a bit onto the bounce there as it rejected green to red. And then it started panicking, and unfortunately, I got all out around the 320 range. I think I was being smart covering into weakness instead of letting the price action bottom and then covering into a trend change, which I could have done here. I could have even made another 20 or 30 cents, but just a little bit too premature of covers, unfortunately. And then I did end up, though, going long. I started in the $3 range for the bounce and kind of just got chopped around for a small loss. But then in the 270, I tried it again. Kyle, just zoom out a little bit. This play I learned from Mark Crook. You want to be buying morning panics on NASDAQ stocks, not quite like how Sykes teaches it, where there's a lot of level 2 and tape reading comes into, but I want to be buying panics into 11 o'clock if it's been downtrending all morning, and it's into the support level from the previous day. As you can see, the morning low yesterday was around 270. So I got long some shares, and it was just a very clean, straight up 40-cent bounce or so. And I just sold that into the resistance. And overall, the ticker on the day between my pre-market loss, my shorts at the open, and then the bounce, I think I locked in around 6 or 7K. So not too bad of a trade there. It's nice to nail multiple angles of it, short and then long. I always like to make sure that I'm trading both ways and not getting overly biased.
Right on.
All right, bring it on to the long side.
There we go. NOVN.
Yeah, could you pull up the data?
I'm not a long. I'm just an overcover. I like to buy big panics.
So looking at this daily here, first thing you notice is there's a huge gap to fill. I know that some people like to look at that, but it really doesn't affect my trading at all, because here's a perfect example. The gap didn't get filled. And I know people were looking at the gap was going to get filled. It literally doesn't apply at all. What I cared about was the 95-ish level that Kyle was just hovering around. 97, I guess it was. There's 95. Yeah, right around there. That was a breakout. And when I'm looking to buy breakouts, I start on the daily chart, and I see this NOVN daily chart. People ask how I found this, and if you look back in, I think it was June, it spiked before. And a great tip that I picked up like years ago was when stocks start running, set price alerts. You can do it on basically any platform. I use Thinkorswim, for my charting, and I basically just sent a price alert. So once that got above 90, I instantly was notified before probably anyone even had it on their scanners, because it came on your scanner later in the day. I saw it on my scanner, but I saw it first because a price alert was triggered. And I just put the price alerts at like very significant breakout levels. So as soon as I got it, I knew this was a breakout, pulled up the daily chart, and I already saw it was trading some really good volume. It ended up trading like 300 million shares, which is outrageous. But if we go look at the intraday, I can break down kind of where I was looking to get in and how I scaled in and out of it. So the morning spike there around, let's see, where did I get in? Around 11:30 was my entry. So so I missed the whole morning spike there. I didn't see the stock because it was going up into that breakout level. And then probably right around 10:45 or so is when it hit my price alert, and I saw it, and that's when I started watching it, because I knew it was at that key level. Jack mentioned, a couple of minutes ago, you want to be seeing on the long side higher highs and higher lows. And into from 11 onward, we set a low there, and then we had a series of higher lows up until about noon. I entered right around the 97 break, I think, was my first entry after we set in a series of higher lows, because that I could then use as a risk level, those previous lows. Yeah, so like 92 was a good one. My first entry, I ended up risking the lowest low there just to be safe. The thing I've noticed the last couple of weeks is a lot of these listed stocks are a little choppier, so it makes it tougher to play. So I used some smaller size at first, but then as we saw some more higher lows and we broke into high a day, I added again, and then ultimately used 92 as my risk level. And then I sold into the spike around like, the spike around like 12:30, I think, was when I got out the first time. But then I mentioned, the play's probably not done. And that's what happens a lot. If I had better patience, I'd probably hold it all day. Unfortunately, my approach is to use the morning, trade it, and then midday, I don't want to be caught in the chop because I'll just burn through a ton of mental capital. And then I come back in the afternoon, if it's still holding up, I'll look to trade it again. So then, right around 1:30 to like 2:30-ish, we set another pretty significant higher low. I usually look at 5 minutes later in the day, a 5-minute chart, just because there's less noise on it. So as we saw some more higher lows, I started getting in again. Just again, simple risking the previous low. And every time we set another higher low, I would add some because I was able to tighten up my risk and get some pretty significant size without risking a substantial amount of money. And then we spiked into high a day. I was really hoping, given the volume, we'd get like a spike to 150. But again, the market is just not the same as it was a month ago. If this was a month ago, we probably would have gone 152, no problem. But it broke high day by like 5 cents, and I, saw some pretty significant topping signs. So I just got out into I think my best out was like 131, 133. 133 was my best out, I think. So
Thanks.
Pretty much top tick that one. But so the main point I want to make here, and we talked about it last episode, is just adjusting. And it's something you always have to do. Like, again, the market changes. A month ago, this probably would have gapped up. But if we go look at today, it got absolutely destroyed. So this isn't something you really want to be overly patient with, not something you really want to swing. Just respect your risk levels, size in when you can, and then when there's some clear exit signals, like, if you break high day by only a couple of cents, that's usually a pretty good sign of stuff move. And if I'm long, I want to be getting out. Yeah. So that's the long of the week there. I took this yesterday. I think I locked a little over 4,000 on it overall between the two trades. So pretty
nice.
Nice
I want to mention the ticker that I didn't trade today, or I guess I did trade it, but I traded it very small size and made literally pretty much nothing, which was ONTX. As you go to the daily chart, it's very similar to HTBX and iBio, huge multi-day runner, usually triggered by a breakout, which is what we got here at about 75 cents. And, I was very excited for this play until this morning. And that's because it gapped down. Now, why don't I like gap downs? I mean, I've explained them before, but for those who maybe haven't seen the episode where I did explain them, I'll explain it here, where I think the risk reward is kind of ruined. So if we went back to like iBio or HTBX, like we were given, as a short seller, I was given and Jack was given, well over 30 minutes to see that this stock was failing, and we could get short before it even went red, right? Same thing with iBio, right? We had plenty of time to get short into these bounces before it went red. With ONTX, it's pretty much gapping down. I think it opened to like 120, so it's gapping down 20 cents, well over 10% at the open. I would be, if I was short, say it gapped up and I was short at like 140 and we went red, I'd be covering at 120, and this thing is opening up at 120. So right then and there, I already immediately feel like this is a chase. I literally feel like this play is over. And yeah, of course it dumps to like 110 from 120. But again, what are you going to risk? So what, say you short route the open at 120. I mean, it's kind of gambling with a low odds risk that you think 120 would hold, because plenty of these spike. And that's what I was hoping for. I was hoping for this to spike to say 130-ish and get short here, risk 10 cents and cover at 110. But you don't know that in the moment, right? And so just short. So I didn't short here. I literally took a small start at like 128, hoping it would go higher. It never went higher. So I ended up covering for like $100. Didn't make, nearly as much as I wanted, because it just isn't the play I wanted. Risk reward wise, it just isn't there. The only way I could have shorted was if I shorted 120 and risked 140 with red green, because that's the most meaningful level. But then the risk reward is way off. I'm risking 20 cents to make potentially 10 to 15. Like, that's terrible risk reward. So very disappointing. But at the end of the day, I'd rather stay safe and put myself in good risk reward and high odds scenarios. And because this gap down, that just was not it. So unfortunately missed that play. But what's up?
You can't nail them all.
No, yep, you gotta miss some. Gotta accept your FOMO sometimes.
Exactly. All right, boys. Any stocks to be on people's radar?
Yeah, do we have any? I think no NASDAQs again, but I have GOVX. But okay, so for plays to watch ahead of or for the next coming days, unfortunately I don't see any great listed plays for shorting. At least for my personal preference and what I look for. But on OTCs, we do have the trend of this month keep rolling with more hot OTCs. GOVX started not even 5 days ago at like 45 cents. We just closed today at $1.40. So we did have a pretty harsh pull midday here, which kind of, I still want to short it. But when it has a pull like this kind of selling is the selling I want to see on a red day, not on a green day. So I still will look to short a first red day, but if it goes down tomorrow on a first red day, I'll probably take less size. If we want to squeeze maybe to $2 tomorrow, I will get much more excited, because now the run is continuing. More longs are getting long. But we'll see about that. Red green probably is the trigger. If it goes red on the day for the first time, that'll probably be it. It'll probably go maybe to this low of 105, maybe $1, maybe even lower. We'll see. But just have to react to what happens. And then WNDW, I was talking to Jack about this. We couldn't find any news. If there is news, then we totally missed it. But this thing just ramped from pretty much the low threes all the way up to 550 in a matter of 10, 15 minutes. So unless I can find news to justify why this run happened, this will also be a short. Will it be tomorrow? Maybe, maybe not. It's only been one green day. I would prefer multiple green days, but being up 74% in a matter of the last hour of the close, it is pretty extended already on its own. So this is also something we're watching to potentially short. Any last comments for you guys?
No.
You want to higher, Jack?
I said hopefully higher. It looks pretty bullish. As you can see, it dipped there, held VWAP, made a higher low, closed pretty healthy. I would actually look to trade this tomorrow long or short. If there's a small gap up and some decent sized bids, I think I would join that for a morning spike over the 550 area and kind of just scale out into that quick morning strength. But if it gaps up and fails or gaps down, it probably will be a short for some kind of fade.
Yeah, I like that idea. Be flexible on long and short side.
I agree. I like that kind of long side too for tomorrow. All right, everybody. Thanks for watching another episode this week in StocksToTrade. If you're new, make sure you like and subscribe. And once again, I'd just like to bring up the giveaway. Instructions are in the description below. Twist is its own show. We broke off from StocksToTrade. So make sure you go check us out. We're on all your favorite podcast platforms. Obviously, YouTube is superior because you can see all our charts. But that's it for this week, and we can't wait to see you next week. So cheers, guys.
Later, guys.
Later.